Joining us live on the show is Devang Mehta, Vice President and Head Equity Sales at Anand Rathi Securities. Afternoon, Devang. Thanks for chatting with us. First up, things just not looking good on the macro front. On one hand, you've had really shocking IIP data indicating that the slowdown is here for real. And then now, with inflation coming in at 7.23%, obviously indicating that the RBI doesn't have too much of an elbow room to cut rates.
Afternoon, Sandeep. Yeah, in fact, what you are saying makes a lot of sense. Actually, what's happening currently is nowhere around the world a good set of data is emanating. Also, what we are seeing in the Indian situation is politics taking precedence over economics. Also, not a single set of good numbers that we are seeing. We are seeing a poor set of IIP data. Also, the inflation number that came today will not at all instill any confidence among the investors. Plus, also, we have been maintaining this stance that the rate cuts that RBI had done earlier would be just a token rate cut, and going forward RBI won't have much tools for as such reducing the interest rates, though they may infuse some liquidity via form of OMOs and CRR cuts, but probably on the rate cut side we feel there are very less chances that RBI has any headroom much in the further of FY13.
Devang, afternoon. So given the sort of situation where, we don't see any signs and any prospects either of the Reserve Bank cutting rates, what would you do with financials at this time? Because today they are the ones which are facing the biggest brunt of the sell-off.
Yeah, in fact, Megha, what we are currently seeing is probably one needs to be little defensive phase into the market at this point. But for someone who is coming into this market and wants to create a portfolio such, probably he will have to be more aggressive because either you get a good set of news or either you get good valuations. So probably the valuations are very good. Currently, India trading at around 12 times FY13 earnings. I think probably high beta stocks or rate sensitive stocks would be a short-term risk, but going forward, the potential, I think if somebody has a 1.5-2 year horizon, private sector banks, which we have always been preferring, something in autos like a Maruti would do a good in the long term.
So Devang, what's your sense, given the data that's coming out, by how much do you see rates getting cut in this financial year?
No, we feel that there might not be further any more cuts. Probably a token 25 bips or 50 bips here or there would be there, but it doesn't look like that it will be a continuous stream of rate cuts that RBI would indulge in, or probably they may have to shift their stance and have a stance that the 7 to 8% inflation will be a new normal. That I don't think will be good for the current government in the scenario.
Devang, you just a few moments ago mentioned the auto pack and how you'd probably look at some value picks there and, talk about specific names. And for the two-wheeler segment at least, Bajaj Auto for that matter, this morning we had a Nomura that came out with a report on the company, and they're pegging a long-term target at about 1,800 odd rupees for the Canter, which is about close to that 2012 high that we've spotted for the Canter. Would there be anything that you'd be buying specifically in the two-wheeler segment at this time?
Yeah, probably we have also been favoring Bajaj Auto over Hero MotoCorp since a long time, and in fact the valuations of Hero MotoCorp do not justify the sales that they are going to do going forward. Probably Bajaj Auto, after the correction that the two-wheeler space has seen, looks to be definitely a better pick. But again, we would more be comfortable with the four-wheeler space, and Maruti will be our top pick there, coming out with an EPS of around 95 for FY13. I think available around 12-13 times. We would have a price target of around 1580-1600 for Maruti.
Devang, as we speak, we're expecting the L&T numbers to be out any moment. Do you have an expectation going on that one? What do you expect that heavyweight to deliver this quarter?
I don't know, probably, but I wish that this is quite a heavy bit. The result for this company should be good. In fact, otherwise we would be still suffering because the capex is already not getting the boost that it requires in the country currently. And I think L&T is more or less a witness of what the capex can do over a longer term period, and available at a ridiculous valuation probably at this point of time. So I feel, and I probably wish that L&T comes up with good set of numbers and shows a good order book to reckon with.